officially start the session. Obviously, just now we kind of started a bit already. We had some banter here and there. But just to inform you guys, whatever we said tonight, though Mr. Sani, economist, certified financial planner, whatever we said tonight is more like a friendly advice. It's not financial advice, okay? It's just based on our own perspective. At the end of the day, you remember to do your own research and stuff, okay? Just a brief introduction of two of our speakers today. Mr. Sani, I'm sure a lot of you guys in the audience know, economist, certified financial planner. He has 30 years of experience in the markets. Kind of gets grumpy a bit of times, but I'll try to
Most
I'll
of
try
the
to keep
time.
it a bit casual tonight. So yeah, you can go on ahead, Mr. Sani. We also have Fast over here. This is the second time we actually do a session with Fast. The first time we've done a session with Fast is during the Celsius crisis. So yeah, actually it's a bit sad because every time Fast is here, there's something happening. I hope the next time Fast we do a session together is about something good happening. But anyway, just a quick introduction of Fast. Later you can take the mic and continue your own introduction. Fast is the CEO of MX Global, who currently has a standing partnership with Binance, if I'm not mistaken. So Fast, you want to go ahead and take the mic and talk a bit about what you're currently doing, just in case the audience here doesn't know.
Yeah, sure. So we're a regulated exchange in Malaysia, and so there are four. The technical terms like registered with the Securities Commission, and essentially what we provide is the legal means to be able to use your ringgit to buy cryptocurrencies. Right now, we offer Bitcoin and Ethereum, which is what predominantly the market wants. We totally get it that a lot of users want other sort of altcoins and meme coins. But I think really the events of today kind of show you that you can't just rely on the top 20 list on CoinMarketCap or CoinGecko, right? And think that that's quote unquote safe. So I think that's some part of what we're going to discuss tonight. Happy to share, and for those of you who are interested, I mean there's a bunch of Twitter Spaces going on, but there's one in particular that has quite a lot of luminaries from the industry. Big names like CZ was on it, Elon Musk, SBF has not been on it yet, right? Lusu, the infamous proprietor of 3AC, 3 Arrows Capital, was a listener and has been a listener for many hours, but also refused to take the mic on those ones. So there are lots of these spaces, and maybe if I can suggest, right, for our session today, what we've learned in MX Global is like a lot of the Malaysian market are in relative terms less tech savvy, right? The less technical crowd. So maybe if I can take the opportunity here to maybe suggest that we keep our conversation today to as close to a layman kind of perspective as possible, because I don't want to get too much into the technical and the technical jargon and stuff, because maybe people will be lost in the in what we share, and more importantly, like I believe there's a huge propensity in crypto where people just take away like a soundbite and then they build an entire Bible out of that, right? So I think we should try to avoid being overly technical and jargon on at least this space, and just keep it very what I think you're gonna ask me how to describe to a 5-year-old. Maybe not the words a 5-year-old necessarily understand, but definitely not expecting somebody to be a smart contract developer to kind of really understand what we discussed tonight.
Yeah, don't worry, Fast. I've already put the Malaysian flag over here in our space tonight. So hopefully we can draw more Malaysians into the space. And by the way, our session tonight, it's open. So if you guys at any point of time want to join in on a discussion, want to be a speaker as well, or ask some questions, hopefully it's not too technical or whatsoever, just don't hesitate to request to be a speaker, and then immediately I will approve you and we open the floor to you guys. We do have a few questions planned, but if you guys have any burning questions, please do ask away. Or if you are a bit shy, you can just DM any of us. Mr. Sani's DMs are open. I think Fast DMs are also open. And I also check my DMs to make sure that we will address all the questions tonight. So Mr. Sani, you want to do a brief introduction of yourself before we proceed?
Okay.
Yep.
I'm a economist / strategist working for a financial advisory firm here in Singapore. We have also a branch in Malaysia, in fact. I'm in charge of setting the asset allocation, so-called the direction of investment for the firm. So a lot of macro stuff. So I set the macro settings, like crypto is an asset class that we want to get involved in. My colleague whom I work very closely with, who is an ex-fund manager. We will then sit down and decide how then do we represent this view in terms of a solution. So we'll find a fund manager who we think will represent a good way for our clients to get into this asset class, so on and so forth. So it's very similar also to the mutual fund unit trust. So if I think, let's say, for example, Malaysia is a good investable team, then we'll find a fund manager who we feel can reflect that viewpoint. So that's how we work. So basically, I'm coming more from a top-down approach, so to say. So when I look at crypto, so it's basically more or less a top-down approach.
Yeah, and just some quick facts over here. Mr. Sani is currently working as the advisor of the Futurizts also, and basically most of the long threads that you see from us, that whenever we write, always goes through Mr. Sani just to make sure all the facts are correct and ensure that we don't spread any misinformation. So huge thank you on Mr. Sani for quality checking our content, because nowadays it's difficult to do quality checks on the things that we're going to talk about right now, which is FTX. I mean, let's just straight away dive into it, okay? Let's just say today, Faz, you have a 5-year-old. Okay, let's just say, I don't know whether you have kids or not. How would you explain the FTX crisis to a 5-year-old?
Okay, so a bunch of American friends from very, very smart schools got together and made a place where you can buy cryptocurrency, and not just any cryptocurrency, but you can do very, very fancy things with it, right? I don't want to use technical terms like the margin calls and all that, but basically it's not just buy, sell. You can do all sorts of things on this platform, and it really attracted a lot of people to kind of invest to the tokens, but also to the various products that they have. And as it turns out, this exchange became very successful in terms of dominating the daily trading volume, right? It's fair to say it's on any given day in the most recent history, a top 5 exchange. That in itself gave a lot of people confidence to use it. So it kind of perpetuates this positive cycle of a lot more people using the platform. Now, as it turns out, they were doing a lot of things with the funds that the investors or the users had deposited without the user's knowledge. Now, to compound onto that, or maybe a 5-year-old would not understand the word compound, but to make it worse, right? They listed a token which seemed from a very surface level, hey, it makes sense, right? We have this token, you can do more things, you can save money on transactions, yada, yada, yada. But as it turns out, they used the tokens that they made to borrow more money. And a combination of these two things, the fact that they used other people's money and then eventually effectively borrowed money against something that they just created, and I don't want to say conclusively, but a lot of the evidence now points to the fact that they had gamed it so that they could really, really over leverage on all of these things. They're now stuck in a position where they owe way more money than they have, right? Money here being a fairly general term of anything that has value within their exchange. So things move very fast in crypto, right? About a week ago, of these very smart friends, only one of them really is a face that you would recognize about a week ago. He's got a big curly hair, and the way it was positioned to the global market, like, here's a good guy that wants to save the world, that doesn't care about money, that just wants to be able to make some sort of profit and then just solve the world's problems, right? He's kind of like Gandhi if Gandhi knew how to use a smartphone and start trading electronic money. But as it turns out, he did very, very shady things with it. And so within a matter of a few hours, they went from a position of saying, we're entirely safe, nothing's wrong, to then having to admit everything is wrong. Nothing is secured. We owe way more than we have. And we're probably not going to be able to pay anyone back. And so we take the legal action that we do to protect ourselves by filing what's known as a Chapter 11, basically like a winding up order. So self-declared bankruptcy to try to protect themselves legally. This has left a huge sea of people obviously upset because they now assume and I think the events in the legal case will show whether there is a chance of recovery or not. But the vast majority of people who have used FTX now assume they cannot get much, if anything, back at all of the monies that they put into the exchange. So yeah, short answer to that, all of that is like this was a huge scale of fraud, and they basically did stuff with your money that they shouldn't have ever been able to do. Oh, and then on top of that, it's not like they were not licensed at all. They had this Bahamas license, which gave a certain level of confidence to some people. Maybe now in hindsight, it's undue confidence, but yeah, this is not a case where a cowboy operator operated entirely outside any sort of legal supervision or regulatory supervision. They did this under supervision, and I'm fully expecting that the regulator is going to say, oh, they did things that they never told us they did, and then they were never supposed to do. The same thing happened in 3AC, right? 3 Aris Capital. Their regulator came out and said, oh, this is not what they told us they have done. But, the proof is in the pudding, and then you kind of just have the entire industry now crying over spilled milk, and probably worse than that, lost money, right?
Yeah, I mean, the scale of the collapse of FTX is actually quite huge, because when FTX and Alameda Research, which is his sister company, combined, it's at least 20-30 billion dollars of collapse over there, and we could see in the crypto market, Tuesday, Wednesday last week, that was when the crash happened. The entire crypto market cap lost about $260 billion overnight. That's pretty crazy. So Malaysia's GDP in 2020, I think Mr. Sani is very familiar with this, is about 300 billion US dollars. So that's almost like 60, 70, maybe 80% of Malaysia's GDP just gone overnight like that already. It's kind of shocking. But I think, Faz, you mentioned there in really simple terms that you have some really shady people. They put on a mask, and they took all your money. They gained a lot of confidence from investors, and then they created their own money printer. Then they backed all those your money with their own money, and then using your money, they decided to just go full on out on advertising, blah blah blah, making the Ponzi scheme much more larger to attract more money to come in, while they keep on printing their own money, because just now you also mentioned they created their own FTT token. Then it all came crashing down when the public found out. Okay, when they tried to withdraw all out the money, and when the FTT token starts to collapse in value, they were unable to repay back all their withdrawals, and that's in essence how I think the FTX crisis, the whole thing occurred. So, Mr. Sani, I mean, when you look at these type of things, right? Okay, you are from the traditional finance sector. You're an economist. Okay, are we surprised to see this? Because what those traditional people, what they're saying right now is that banks do it too. Banks do it all the time. But why aren't we seeing something like this in the traditional finance sector, or have we seen something like this already?
No, we have. I mean, if you were to ask me, it looks very much like a combination of what we saw in the year 2000 and 2008. In the year 2000, right after the dot-com bust at the top of it, as the markets were coming down, we had again a series of scandals within the corporations. Those of you, and probably many of you are probably were still in school back then. So those of you old enough would remember it was Enron, WorldCom. There were accounting entities like Arthur Andersen, which were involved in it. So basically, it was a lot of accounts which were covered up, and so on and so forth. So it was really a big corporate accounting scandal there, which is reminiscent of what we're facing or seeing now, where accounts are being manipulated, and so on. So we've got that part of the 2000 crisis. And we also have part of the 2008 crisis, which is the lack of transparency, which is no one knows who owns what owns who has lent what to who, and such. It's just scary to even see tweets coming out which suggest that some exchanges received money right ahead of, just before they needed to prove their reserves in order to show up the reserves, and then transferred money out after that, because they were just basically borrowing money to some friendly party to give them to show that they had the appropriate reserves. And this was what really happened in 2008. Because back then, I think both the Federal Reserve, Security Commission, everybody was trying to figure out who owns subprime. How much of subprime do these guys have? And no one could put a finger on it because subprime was at that point in time off balance sheet. It was contingent liability. No one could put a finger to it. I think there's really I think there's a movie or show about it where the Bernanke brings in everybody into a room and says, how much do you have? Tell us. And that creates an environment of fear because no one wants to lend to anybody else because I don't know your balance sheet. And this is what probably is happening today. We're all taking everything off the exchanges because we don't know who's going to be the next one. We don't want to take that chance. So my view is we see it also in the traditional finance, albeit because it's regulated. We don't see the extremes of it. What I'm seeing now in the crypto industry is the extremes of greed being played out. Things which would be outright, I won't say impossible, but harder to get away with when you talk about traditional finance, because there are regulators, there are auditors, there are accountants, which are supposedly there's accountability somewhere. But in
Sorry, Mr. Sani, I think I lost you
this
a bit
particular
there.
case,
Is it
because
just
there's
me
lack of
or Faz, are you losing it there?
regulation, and sometimes
Yeah, I think Sunny's breaking off a bit.
Yeah.
with the absence of regulation in
Wait,
certain areas.
let's just wait.
Hear me? Can you hear me now?
Mr. Sani, I think I lost you. Yeah.
Yeah, actually, you know what probably just happened, Sunny? You started talking about regulators and all that, then Big Brother heard you saying this on Spaces and started trying to censor you.
Regulasi.
No, I'm kidding, guys. I'm kidding. To the listeners, I'm totally kidding.
Just when you talked about the most important part, Twitter decided to silence you a
I
bit
think
and don't want you to talk about.
Elon Musk has this filter now.
Yeah, Elon Musk has this filter talking about but go ahead. I think we
Yeah.
can hear you clearly right now. Go
Okay.
ahead. You were talking about the regulations and stuff.
Yeah. So I was just saying that we don't see this kind of extreme greed being played out in the traditional finance because there are many parties, accountants, auditors, trustees, custodians that are in place basically to ensure that there's some form of accountability or check and balance, so to say. But unfortunately, in crypto, I think it's still in its infancy. So you have a lot of gaps where although you may have auditors and such, you still can find loopholes because it's still a very fairly new industry where everybody's learning. So I won't be surprised if some of these key stakeholders who are supposed to be supervising exchanges, they themselves are learning the ropes as they go along. So I think that all adds up to this situation where eventually regulation will come in, industry standards will come in. So it's for the betterment of everybody, I guess.
Yeah, I mean, though it's for the betterment of everybody's future, it does come at a huge cost, the sacrifice of right now a lot of victims. When we look back at the Terra Luna death spiral, the collapse of 3AC, then Celsius, then Voyager, then BlockFi, then now this FTX. We don't even know whether the contagion is over yet, which is really goes to show how early we are in this particular industry. And I think another point which I would want to add on what you said just now is the liquidity that is readily available if traditional finance companies encounter any problems, like those when you talk about banks. Every time the Federal Reserve can step in and inject any last minute liquidity, send them some money just to prevent them from toppling, keep those companies alive. But when it comes to crypto companies, you don't have the government to come and save them, right? The truth just reveals itself through the blockchain, and you have a lot of like tech and dev experts that on Twitter that will just easily reveal your scheme. But talking about tech and dev experts, Faz, like how is this possible? How did people? How didn't people manage to uncover this? If I will put it simply, this Ponzi scheme years ago when FTX was founded in 2019. How did it? How did people allow this to blow up into such a huge bubble? And right now, only, let's be honest, like CZ was the one which popped the bubble eventually. How is this possible, man? Fast.
Well, two things, right? Number one, like Sani said, there are lots of gaps in the crypto space. It's because traditional finance is not a new space. These problems or these gaps also exist in traditional finance in the early days, but over time, standards were adopted. People learned, yes, unfortunately from unfortunate events, and then standards were set. That's why there are less gaps. I wouldn't say there are no gaps in traditional finance. There are relatively less gaps. The other part of this is that actually we say it so easily, like, oh, blockchain is so transparent, immutable, everything's on the chain. I mean, come on, you try to open any of these blockchain explorers. Do you really think it's like reading a book and where everything's already kind of like laid out? It's not like going to Google and say, are my funds safe in FTX, or where are funds flowing in FTX? No, it's not that simple. It's possible, but it is not something that definitely the average Joe can't do. And it's also technically a challenge for anybody technical to do, right? So it takes a lot of effort. So I think sometimes, most of the times, the crypto crowd entirely discounts how difficult it is to do analysis on the chains, because we just kind of cling on to this mantra of like blockchain is entirely transparent. You cannot lie about it. You may not be lying. It's just that nobody knows what to look for, right? So I think those two were very important factors. The other part, of course, that you shouldn't discount is that not all of these arrangements or things that FTX did is quote unquote on chain. A lot of the agreements were done with off chain or in real life agreements, right? So when they move funds from wallet A to wallet B, you just see them move. You may not even be bothered to look, but you don't know why the funds are moving. The other core element in what makes the FTX debacle really sinister is the fact that you essentially had an exchange that also had, its own VC or investor entity, and essentially the exchange was loaning money to the other entity. That entity was then investing it into projects. Sometimes they're direct projects, sometimes just investees. But whichever way it went, those investees then plowed the money back into the exchange, and then the cycle just kept going, right? Because for me personally, it was about a year and a half ago that I started wondering, how much money does FTX have to invest, right? Because taking over a stadium is not cheap, right? The naming rights of a stadium, that's definitely a huge expense. But like they continually made so much investments, and I'm wondering, like, I don't really hear a lot of people investing in FTX's funds, because I'm from the VC and PE space, right? So for me, once I saw that cycle where FTX or Alameda would put money into a project, that project would then list the tokens. There'll be lots of liquidity generated, then the money flows back into FTX. Something, that's a scenario where like 1 + 1 doesn't equal 2, right? Something else is happening here, and in the traditional finance world, banks, not to say get away with it, but there's a structure or protocol for banks to do this. It's called fractional reserves, right? So the regulators and so all of the players know that the banks don't have as much money as they have loaned out, but there's a way that they account for this so that they don't go into a scenario where they cannot afford to recover from. And of course, you still have events like 2018 that happen, but like Sani said, like it helps minimize going to the extremes. Yeah. Maybe if I can just share one more thing, that what we saw happen after the news came out of FTX. Number one, we cannot discount the fact that it was CZ that called it out on Twitter. I believe anybody on this space right now, if you wrote this on Twitter, nobody would bat an eye. In fact, the direct opposite would probably happen. Everybody will whack you for it, right? Because you're now killing their FTX dream. But because it was CZ, an even more prominent or equally prominent player in the industry, calling this out, people took it seriously, and obviously, then it unraveled the way it did. Now, what I don't agree with is the same behavior, or rather, my hypothesis is like the same behavior led to FTX being able to do this. It's the same behavior that led to CZ being able to expose it. And then when, again, the influential figure saying, hey, here's a solution for it, proof of reserves. Everybody rallies around it and says, yeah, everybody do proof of reserves. I don't believe in proof of reserves because I don't think it will work. The reason being, and my core reason for this is because I will not be able to get PwC and Ernst & Young and everybody to audit my books to do the proof of reserves. I'm going to get Cap Ayam Sdn Bhd accountants to do it because there's still so much that has not been fleshed out with regards to the accounting treatments and everything, that there's no standards, there's no strict standards yet. So everyone's going to come up with their own hashed version of proof of reserves. And mind you, right, like, yes, Binance is our investor, but when they published their most recent proof of reserves, they hit this wall immediately. They said, hey, we were looking for an audit firm that would help us do this. Oh, but we have a problem. They're not a top tier or big four firm, and oh, you know, it also turns out that they're also an audit firm that serviced FTX. So it may be risky for us to take it. I can assure you one thing: a small enough firm will take a large enough of sum of money to say whatever you want them to say on a piece of paper, especially because this is not a regulated space. So, or rather, a globally regulated space and without global standards. So, I personally think it's just too early to demand for proof of reserves, and that goes to Sani's point, right? What were the large exchanges doing? They were gaming it. They were like, I have to show everybody I have $1 billion. Hey, I call some of my friends. Hey, transfer to me this, X amount of USDT, USDC, whatever, right? So I can show my books are healthy, and I'll send it back to you as soon as I'm done. So we shouldn't just cling around personalities that say one solution without really thinking through it. So personally, or rather from MX's point of view, we're not going to do all these ridiculous things just because people are saying that's how you should do it on Twitter, because the same people who are saying it actually have no idea what the reports or the outcomes should be, right? So I think this is a scenario where you have to lean back onto the regulator. It will take time. The regulators will definitely need time to figure this out, to apply this, to set the standards. But that's way better than, let's see what's hot and trending and what people are saying we should do on Twitter. That will just not work, because that's how we ended up in this mess in the first place.
Yeah, actually a lot of good points you mentioned right there. Let me just unpack it really quickly. I mean, it's just really surprising to look at how FTX grew in the span of less than 4 years, right, Mr. Sani? When you look at a company like this, right, actually, a question for you real quick. When you look at a company grow so quickly in the span of 4 years, and for them to be able to acquire a stadium, as I just recently posted right here in the space, $135 million in March 2021 they spent. That's not just all, from 2021 to 2022, when the bull market was already kind of over, when crypto winter was kind of near already. You had FTX buying a lot of advertisements, hiring top celebrities, spending $375 million in total. Then after that, they were indirectly bribing politicians also in 2020. Sam Bankman-Fried was actually one of the second largest donor to the Biden campaign, having spent over $5.2 million. And he even has plans to spend another $1 billion to influence the 2024 presidential elections. So, Mr. Sani, when we look at this topic in itself, right, how on earth does this company find so much money? I mean, it has its own money printer, yes, but I still don't understand that when it grows so fast, it's definitely going to draw a lot of suspicions to it, right, Mr. Sani?
Well, I guess, yeah. I mean, there were a lot of suspicions. It's just that there is no structured framework. Unlike, we have to admit, like, crypto is not a place where you find a lot of research, proper research being done. In the traditional finance world, if you had a company like this, you would have research analysts from the investment banks looking at it, especially if it's a public listed company, and then coming out reports and saying, these numbers don't match and this and that. Here we have basically people writing on their tweets, I've done this, I've looked at this, and they get flamed and they get criticized by those who are followers of FTX and stuff, and they only get vindicated when, with hindsight, looking back, and stuff. So it's really, there's no formal structure where they are credible. These people are credible. I'm not saying that they're not. It's just that it's still a very cowboy-like situation where and cult-like, as mentioned, as Faz mentioned earlier, cult-like situation. Where sometimes truth gets buried under this barrage of pushback that you get. So unfortunately, that's the case. Well, today, if I were to invest in a certain company, I could get from the street research articles. It's covered in the news and so on and so on. So I think one thing with FTX was basically the fact that they had very big backers, like Faz mentioned. So in a scenario where I don't have the ability to do due diligence, and this sometimes happens when I try and look into investment opportunities. In the traditional finance world, we at times will ask funds, who are your institutional investors? You may not be able to tell us the name, but tell us how big they are, and so on and so forth. So sometimes they are able to provide us names because the institutional investors themselves have made it public. Sometimes they're not able to, but they can tell us this is the largest family office in the US, for example. Okay, so we have to take their word for it. We draw comfort from the fact that these guys are there because they invest 10 times more than we do, than we do, or even much more than that. So we believe that they would have done thorough due diligence because of their amount of investment. So in this particular case, you don't have research reports on FTX. I don't think anybody has gone through it. There's no rating agencies to give it a rating and such. So I think one of the sad thing was, I think a lot of people depended on the investors, and the list of investors were A plus investors, meaning to say that they were very well known. We even had Temasek from Singapore in it and such. And unfortunately, basing it off the names didn't work. So so again, one question I have, which I think remains unanswered, is what happened to these guys? Didn't they do the thorough due diligence, which is probably expected? I mean, that's something which we probably will find out in the days and weeks and months ahead.
Oh my God, I totally agree with you, Sani. I think the part that I still cannot figure out is, sure, maybe I couldn't do the due diligence, right? I'm just a token holder, for example. But this is insanely huge and professional funds. And that actually, like you said, it lends a lot of credibility, right? Big names, big international VC names back these guys. And by the way, similar names also backed 3AC, right? So I also can't figure out, why couldn't they spot this? Because clearly, I mean, you can cook the books, but how far can you cook the books when you're already involved in due diligence of a fairly well-established and someone like, for example, like a sovereign fund, right? It leads me to believe that most funds or most professional investors, even in this space, are still not equipped, right? They don't have all the information and technical knowledge to be able to really assess these things. And maybe it's just something that's just not possible at this point, right? Because the market maturity is still so early that the majority of people who can or know what to do either have a huge opportunity cost, or they're all learning as we go. So it's super risky, right?
Yeah. And I think that's why I personally think that the FTX implosion or crisis actually will result in almost 100% dry up of I may be wrong, nothing is 100%, but a large majority of institutions just not coming in or even pulling out whatever they have. Because you must remember, for many, who was the pension fund that got involved? It was a Canadian teachers fund or so. Many many institutions, including myself. I mean, in the sense that our Malaysian entity had invested in Bitcoin, for example, part of its treasury in Bitcoin. Within the board of directors, there's probably just one guy, if it's a small board, that says we have to invest in Bitcoin. Okay, and say that's me, because this is something which we, our clients are investing. We need to invest together with our clients to show solidarity. It's a small amount, and the rest all probably are like, I don't know much about it, but you know what, it's going up. People are talking about it. Seems to be quite okay. Okay lah. Even though I'm quite reluctant, let's go ahead with it. That now that this has happened, that majority group will come back and say, look what you've done. We've lost huge amount of money because of that, and so on. And if my fallback is, these huge institutions were invested in it, and it still happened, the other board of directors will say, well, in that case, we can't even trust any single investment in any single platform or any single project, because even the big institutions can't do due diligence on it. So I'm assuming this discussion is taking place in every single boardroom that has invested in crypto, except maybe MicroStrategy. So basically, the pushback will be quite high. So it's basically, I can assume, let's get out. If we are not stuck, I'm not going to wait until this platform, something happens to it, because it seems that no one can have an idea of what's going on. If the big guys can't have it, can't know what's going on, how do you expect us to know what's going on? I mean, I think that's the discussion that's happening, and so I won't be surprised. And I think the numbers have shown that there were already institutional withdrawals from the beginning of the year. I won't be surprised if it accelerates after this now.
Yeah, I mean, those are really good points you mentioned. At the end of the day, it really boils down to the number of loopholes which all these billionaires or CEOs can exploit and then make their accounts or their image look all ring and rosy, Then you have all these big institutions come in and do all their research. Well, on Twitter, there's literally over 10,000 books or threads on how to do your own research already. But even then, you see, we still see this happen. We still see things like the Terra Luna death spiral, where Do Kwon bought up a lot of confidence from all the investors. They call themselves lunatics. I was once a lunatic previously, so I used to believe him, all his word that he says. And I guess, Faz, the next question is, you are a CEO of an exchange, okay, MX Global. So what should CEOs or billionaires learn from this crisis? When you're currently managing the exchange, I'm also quite curious. Another question would be, how does your exchange, if you're willing to disclose it, of course, how does your exchange actually earn revenue? And is it possible to do such amount of advertising like what FTX has done?
Well, it's a difficult question, right? A lot of the larger exchanges, the CEOs become, for all intents and purposes, celebrities in this space. And you become not a micro influencer, you become then a macro influencer, right? So I believe that there must be a decorum amongst the CEOs of especially large exchanges and large projects, where they cannot be making misleading statements, or they cannot be directly or indirectly shilling any projects, right? So that's why even at MX Global, I can tell you that, like, we have in the pipeline the ability to list quite a few tokens. As you know, in Malaysia, there's only nine tokens, right? But we ask ourselves, like, is this the right time? Is this the right kind of token to be, even if the regulator says it's fine, should we introduce it to the Malaysian market? Because even in our experience, right, organic volume is actually very, very low. Organic volume. We ran an experiment. We said, look, no intervention at all, no calling out market makers, no telling guys, hey, can you keep the books full, right? None of that. And you'll see that actually organic volume in crypto is very, very small. And we confirmed this with a partner that does advanced on-chain analytics, right? Really, organic volume in crypto is still low. So the majority of exchanges have to be able to introduce or intervention where you make it look exciting enough, that there's enough activity that people continue. And yeah, effectively you're building out FOMO, right? So I think CEOs, it's very tough, bro, because if you admit this, then it's kind of like the entire industry has kind of proven itself wrong, right? Like, people are not really buying crypto as kind of like as
Investment.
as aggressively as people say, right?
Yeah.
To be honest with you, 90% of the guys I know in the crypto space, even locally or regionally, are there to make a punt, right? Everyone's looking for where you can make this crazy overnight pump and all that. That's the majority of active traders, you know. So it perpetuates a cycle where, as a CEO, you're highly motivated to kind of keep these guys on your platform. Now, it comes back to the question of like, how do we make money as exchanges? The base exchange model is actually very vanilla and very transparent, which is that you buy or sell Bitcoin or Ethereum, I'm going to charge you a certain fee to make that happen, right? You pay me that fee because I build the infrastructure for you to be able to do it in that safe way, or I wouldn't say automated way, but through a single platform, right? Which should be valuable to you, because otherwise you're finding random strangers somewhere in the world and saying, bro, I got one Bitcoin to sell. Do you want to give me money for it? And then that guy has to give you money, and you give him Bitcoin, or you substitute that with any other crypto on both sides of the equation. Now, at MX, we try a model where if you put up the order, as in you're a maker, we don't charge you anything, because we want to thank you for putting up an order, right? But if you take that order, so you're a taker, we charge you 0.5%. And the amount of people, and it just takes one time for them to experience a close to 0% fee on another exchange, then they just lose their mind. Oh, why are you charging me so much? It's 0.5%. It's not that much, right? It's less than 1%, half a percent. But large exchanges tend to go to a model where the effective rate that they charge you is close to 0%. So then that in itself then should lead you as a responsible investor to ask, hey, if they're not making money from me just doing the vanilla flavor thing, which is buying and selling my crypto, how are they making money, right? And obviously then the CEOs or the leadership team of these exchanges have to get quite creative. So one option is to obviously raise outside capital. So you find other investors, typically funds, who believe in your long-term vision and long-term growth. So they let you spend their money while you grow. That's a route that MX has taken, right? We find partners that add value, not just from a financial standpoint, but technological standpoint, market standpoint. And we say, hey, we have this vision. So if you believe in that, and evidently Binance did, because our strategy is significantly different from Binance, right? And then they say, okay, we're going to give you some of our money. You use that to keep the lights on and to build a business, and you build our economics. But as days go by, there's significant pressure for ourselves as an exchange to say, because our users come to us and say, hey, you charge me 0.5%, there on the other side, i.e. like just another website, you don't even have to make that much of an effort to get to it. They're going to charge me half of that, or they're going to charge me almost nothing. I want to go to the guy that charges me nothing. But, it still leaves a question, how do they sustain their business if they make no money from you? So a lot of these larger exchanges, they come up with very sophisticated products, okay? I would say, and again, not financial advice, but if you look at the overall design of blockchains and cryptocurrencies, the only passive way that I can understand that you'll be able to grow your money is by staking behind a validator of the chain. And it's not cheap, right? If you want to run your own node and all that, it's not cheap. That's capital investment. But essentially, you're earning because the network makes new reward tokens that you then receive because you've added to the network activity or the network processing capability. Anything else beyond staking to validator nodes is a financial product, right? And that's in my view, exactly what we see in FTX. They made so many complicated derivative products, and which is why, ironically, today, why didn't we see this coming? Because that's exactly how we ended up in the subprime subprime crisis, right? Bankers were making super complicated products that you have no idea what's really under the lid, but you're just throwing money at it, and super complicated. So maybe to keep it, for me especially, right, to keep it simple, is crypto is really new or really young, so I shouldn't be expecting to do very mature things with it. I should just be doing very simple things in crypto, sending my Bitcoin, trading my Bitcoin, right? And if you delve a bit deeper, then yes, validating on the network or staking. towards the validators of the network. Anything else beyond that is a financial. It's definitely going to be a financial instrument, and more than likely too complicated for most of us to understand.
Yeah, honestly, those are really a good set of thoughts right there. Like, you talked about, in essence, how exchanges make money, and I initially was looking for some secrets from you. I was like, what secret strategy do you have? Do you have like a secret money printer or whatnot? But actually, it's pretty simple. You just create a marketplace to connect buyers between sellers, right? Every time you try and help them fill their order, and then you charge them a small fee. That's how you earn your revenue. And with that, you'll be able to fund your own costs. And if you want additional funding, you definitely have to look for investors. It's actually a really simple concept, but it's just really surprising how FTX got to this stage. I'm still, right now trying to piece up everything together and still really at awe. But Mr. Sani, now on to you. This one is pretty interesting questions. Like as an investor, okay, you are managing funds, okay, you're dealing with large assets, you're dealing with huge amount of money, okay, that means you're an investor as well. How do you actually avoid something like this? I mean, you want to read the FTX report or what? I don't even this is why I bring you here for the next session. Yeah.
Maybe the easier way to answer this is we have, for example, we deal in regulated products because we are regulators, so we can only deal in regulated investments. But every now and then we have clients coming to us, especially from Malaysia, with all those scheme cepat kaya, their money game and such, and they are like, oh, my friend told me this is good, he's gotten his money back, and this is, I want to get involved in this. And we just fail to change his mind because he's just so adamant in that I want to invest in it. So we said, fine, we're your financial advisor. We understand that you sometimes want to do funny stuff. We respect that. but let us give you some advice. You take maximum 10% of whatever you have, okay? That 10% pot, you can do whatever you want. We don't care, okay? Because again, you want to do your stuff. Whether you take all that 10% and put it into one money game, you want to take 5%, put it in one funny stuff, another 5, we leave it up to you. But 10%, sometimes they beg us and say, can you increase this to 15-20% and stuff like that. It's very hard for us to say no because it's their money, but we have to put our foot down at a certain number lah. So we say, okay, fine. Because why? We are not responsible when you want to do something against our advice. But we know that if it goes wrong, it's not going to pull you down because it's only 1/10 or maximum 15-20% of whatever you have. If it goes down, we will just say, told you so. If it doesn't, we just say, well, lucky you, So for things that we don't understand, for things that we may not have full knowledge of, we try and position size it so that if anything wrong happens, it does not impact our overall financial condition or situation. So similarly, in this situation like this, it would be something along that line. If you're investing a certain crypto, for example, even a certain share or any other products, we always say don't invest more than 10% into a particular fund, into a particular investment. You're asking for trouble if you do.
Yeah, it's in essence just don't put all of your eggs in one basket, and that the diversification strategy actually is the one that will keep you alive, because at the end of the day we don't know whether Bitcoin or what will collapse the next day or not, because everybody thought FTX was one of the strongest exchange. In fact, before it collapsed, FTX was the second largest crypto exchange by volume, only slightly behind Binance. It was really rapidly climbing up to the ranks and about to overtake Binance already until this drama happened over here. Okay, so I think we are down to our final 2 questions of the night.
Yeah.
Obviously, I want to remind you guys again, this session is entirely open. If you guys have any questions to ask, do just request to be a speaker and I will immediately approve you. You can come up, join the panel and talk about your thoughts also, or you can just come up and ask your question and then go back down. Okay, so first, I got another question. Okay, let's say right now we look at this crisis already, okay, and would you say that this crisis is over? Like have we already been through the thick and thin? Because right now we're looking at people asking whether this is the bottom already or not. I know I'm meant to ask this question to Mrs. Sani, but I'm going to ask both of you now on what do you think about this first?
Short answer is no, right? What we saw was the implosion of FTX. But we know that FTX had holdings and business with lots of other companies, whether they were lenders, whether they were CFI, whether they were even projects that FTX had invested in. FTX was not a small player, right? Or rather, is not a small player. That's why I'm fairly confident that directly from FTX, there will be other consequences that will come to the fore, right? There'll be other projects, and it only takes one more, right? That not this is even beyond like a rug pull kind of situation where basically they raise money and then they disappeared. There are probably projects which are inextricably tied to some other arrangement that they had with FTX or Alameda. And my gut feel is that they are trying to figure out how they can right their ship. But for those of them who can't course correct in time, that's going to come out on Twitter probably, over the next few days, maybe even next few weeks. We saw the same thing from 3AC. In fact, I was on a different space around the first fallout of 3AC, and people were saying, is this the bottom? Like, is this the worst? And we all just conveniently wanted to ignore the fact that 3AC dealt with other people, right? With other crypto projects and with whether they dealt with other people's in crypto or fiat. There's so many relationships that are going to have to correct themselves or correct their business, and some of them, I believe, will not be able to save it. So no, I don't think this is the bottom in that sense. Number two, the way that the industry reacts immediately after this FTX debacle may also then expose another player, right? Just now, I kind of shared like CZ saying, let's use proof of reserves. Maybe it works out, and then now we know another emperor that has no clothes, right? Another shady operator. Or even in the opposite direction, it may also not work out well because exchanges or other players may start gaming their books, and in doing so, trying to save face, they create another problem for themselves that they may not be able to dig out. There are a few threats that say, like, in the beginning, maybe SPF wasn't really planning this as a sinister scheme, but one thing led to another, and then he dug himself a hole, the hole got deeper, then he had to continue to lie, and it is compounded. So we may be seeing, or we may be living through the early stages of that path for yet another player. So, I was speaking to some of our partners, investors, and I think everyone assumes that Binance is here to stay, and Binance is too big to fail. I don't believe so, because number two just went out the door, right? So, as much as I love the support that Binance has been showing us and all that, and I do think there are a lot of well-meaning people and very smart people working at something like Binance. The top 5 or top whichever exchanges or top DeFi protocols or even decentralized exchanges is not set in stone, right? There's going to be a lot of course correction, and I think a third wave will happen when the regulators start coming up with very firm rules, and then you're going to see another onslaught of businesses that maybe didn't operate in a very naughty way before the regulations, but post new regulations, they're going to be caught out. So no, I don't think this is the bottom, and I don't know if this is a good or bad time to buy crypto, but I think if we shared, you do your own research, and unfortunately for the typical retail investor, there's just so much that you could research right now, and there's also so much noise that will distract you from kind of making a sound judgment today. So I will proceed with caution, and really try as best as you can to make an informed decision before you kind of click that buy or sell button, right?
Yeah, I just want to latch onto your point where you talked about institutions being too big to fail. I think it's really this cancer mentality. I would say it's pretty cancer. This cancer mentality that led to the dot-com bubble, the 2008 financial crisis where the Lehman Brothers collapsed, and more recently, in fact, in crypto terms, it's the Terra Luna death spiral, obviously. At one point of time, the UST and Terra, almost even Luna, is one of the top 6 coins in the crypto market. Nobody thought it could fall, and then it just fell in less than 3 days. It dropped to zero. And we're just seeing the same thing happen over and over and over again. And right now, a lot of trust is being placed on CZ because honestly, it took a very good opportunity to capitalize on the other exchanges' failure. And then he decided to push out some very complicated stuff, proof of reserves that not everybody will understand. But when you look at it, oh, it sounds very technical, I trust them. And then you have a lot of people still very convinced that Binance is too big to fail. But Mr. Sani, same question. Is the contagion, do you think we've seen the bottom? And if we compare it to the equity market or whatnot, I mean, basically where are we going to head next? What's your projection over here?
You know, one question I've been thinking about is if this was a regulated industry, and FTX was basically under the realms of the Security Commission or such, would there have been a bailout? Because we've seen in traditional finance, when it's too big to fail, the authorities will step in to stem what we call systemic risks. So that I mean, it's just an open-ended question. I was just asking myself over and over again, is it too big? And I don't have the answer, but it does seem that, as you correctly mentioned, it's a very large exchange. We don't know how far those tentacles go into the rest of the crypto industry. We are seeing signs of it. I think there was one hedge fund which just announced it had 50% of its holdings in FTX. We also have seen bits and pieces of news coming out to say that projects have suddenly gone dark, meaning to say they have just gone offline, and people suspect it's because most of their funds were on FTX. So FTX basically, because of its size, catered to a huge number of sub industries, whether it's people doing projects, whether it's funds using it as a place to custodize their or even just do trading and such. So even people like us, we have one particular accredited investor fund, a crypto hedge fund, that our clients get access to the crypto markets via. First thing that the news came out was I was straight away in touch with them. I said, look, okay, what's the exposure? And they said, we're talking to the 10, because it's a fund of funds, so they invest in 10 other hedge funds. So they are a hedge fund. They manage the overall risk of the portfolio, and the portfolio is made up of 10 other hedge funds, which are doing the traditional strategies, long short, arbitrage, risk parity stuff. But instead of using FX, they use crypto. Does very well. But anyway, first question was, how much exposure do we have? And they said, we've spoken to the 10 hedge funds that we are invested in. 7 came back to say no, they're not in FTT, they're not on FTX. 3 of them have exposure, but it all adds up to about slightly more than 3%. So okay, that's fine. But now it's come to a second level, is the discussion has moved on to, do we have counterparty risks? Okay, meaning to say that some of these funds, are they invested in people who may have exposure elsewhere on a different exchange, but that exchange has some cracks already occurring that we can't tell. So because it's just so opaque and non-transparent in the sense that you can't tell, like back in the subprime crisis, who has this off-balance sheet contingent liability that we all don't know about. I'm not going to lend to anybody. I'm just going to put my money into the overnight repo facility that the Federal Reserve has, because I rather have 1% return than to lend money to another bank and not know whether I'm going to get it back the next day. Okay, so I think that's going to impede the liquidity in the crypto world. Everybody's going to worry about either trading or even lending or even transacting with another counterparty, because I don't know who your custodian is, I don't know who your exchange is, and so on. So that in itself, I think will put a cap on the activity on crypto. And then you bring in, again, like I mentioned, the institutions who I believe are now on one side of the boat, i.e., all trying to exit because they cannot justify to either their investment committee, board of directors, shareholders, stakeholders that why should they continue to invest in something where even the big boys get burnt. And then I think there are stale bulls still around who will look for any opportunity. The so-called rally that we're seeing now, the so-called CZ rally, the CZ intervention rally that we're seeing now. We all know in traditional finance, every time the Federal Reserve comes in during a crisis, the market goes up. But seldom does it signal the bottom of the market. You've seen the Federal Reserve intervene during 2008, during 2000. The market doesn't, this again, I'm just using traditional finance and applying it to here. In traditional finance, the markets never bottom upon intervention by the authorities, upon introduction of schemes like the Troubled Asset Relief Program, TAP, which is very similar to what CZ is trying to set up the fund to buy out them because they're good. When value unlocks next time, you make money back and all is fine and dandy. But it never works immediately. It's good to have in order to bring back confidence, but the market will only bottom when the sellers run out. I know it's a bit difficult to understand what you mean by sellers running out, but literally that. Literally, when everybody who wants to sell has sold, the market will bottom. And that typically comes, and that we all know when we talk about things like what we call capitulation. And that really is a sign of everybody just throwing the towel. Those people who have waited and waited and waited, they finally give up, they throw in the towel. You see one long red bar there. All the way down, and people are talking about jumping out windows and such, and basically that's really the point where all the sellers have sold. You literally have no one else selling, and that's where markets will bottom out. So I don't think we've reached that point. I think the institutions want to sell. I think the liquidity will be very sparse. I think there are individuals who also will capitulate because retails are strong holders, but at some point they will give up. I think only after that, and I don't know where in terms of pricing that would put Bitcoin and everybody else. It could be a case, and then hearing this also is if the regulators come in very strongly now, then you are talking about many altcoins being scrutinized and being checked upon. You don't want to be in a coin where the SEC is looking into its books and stuff. So you may want to get out, and you want to just cash out. So all of this. So there's still hurdles, but having said that and having frightened everybody, I'm very positive about this whole situation. Because why? Because if you look back and you ask yourselves which was the sector that got hit the worst in 2008, it was the banks. It was the financial sector. It was a financial crisis. So banks were beaten left, right, and center, bruised and battered, and so on and so forth. What happened after that? Regulations came in. You've got the regulations which forced them to have higher capital adequacy ratios. You had regulations which basically forced them to break up the banks because your trading arm couldn't be together with your retail arm, and so on and so forth. And 10 years, 15 years later, now today, when we talk about a recession, we talk about a deep recession, we talk about potentially a huge reset in the economy, which sector doesn't come on top as being extremely risky? The banks, the financial sector. Why? Because they underwent that reset. They got strengthened by the regulation. They became stronger in terms of balance sheet. And today, when you want to rank and you ask anybody where's the next blow up going to be, they're probably going to say corporates, zombie corporates, single B, double B corporates who have no cash flow, but because of the low interest rate and a lot of liquidity, managed to borrow left, right, and center during the past 10 years. Liquidity is drying up, interest rates have gone up. These are going to be the place where the next crisis is going to happen. People are going to point to that. People are going to point to the sovereign side. People are going to point but they're not pointing to the banks. Why? Because the banks are strong today due to what happened in 2008. So I think crypto is on the positive side. I see that happening for crypto. So to me, it's positive. It's just that short term, we have to undergo this pain. It's a necessary evil to come out of it and become better, so to say.
Yeah, this
Actually, on
actually
that, right? Actually, on that, maybe the listeners, especially if you're Malaysian, you might be interested to know that the SE today released an update to the guidelines of recognized market operators. So as MX Global, we're a digital asset exchange. That's under that umbrella of recognized market operators. So what Sani was talking about before are effectively capital buffers, right? Regulators say, hey, you want to provide a new product or a new element of risk. You do that by putting more skin in the game. You show more money on the table before you roll this out to the market. And if you read the new revised guidelines which just came out today, you'll see that, and we've been talking to the SE about this for quite a while, right? We know that one of the problems in the Malaysian market is liquidity. That's why you have a lot of P2P players. That's why you have a lot of OTC players, all kind of operating in the shadowy, in the shadows. And I really recommend a lot of people not to do this, right? Because obviously there's a risk that you may not actually get what you are promised, but also there's a further risk because now cryptocurrencies, in terms of a tax guidelines, is already made clear in Malaysia. So you're going to have a hell of a time trying to explain why you bought this thing from this dodgy Persian guy in Mont Kiara, and where did he get it from to give it to you and all that, right? So one of the new improvements in the regulations in Malaysia is the ability for exchanges like us to provide direct access to liquidity, i.e., effectively like a one-click buy, sell, or instant buy feature, right? So I know that one of the regulated players already has introduced this, but when the SC looked at that model, they said, okay, the way that you can introduce this to the market is that you must capitalize an asset exchange with 5 million ringgit before you can even operate the business. Now, to do this additional feature, which is to provide direct access to liquidity, or basically one-click buy-sell, right? Where we are the counterparty to you when you want to buy or sell the crypto, we have to put out another 5 million ringgit and maintain that capital balance for that one provision of that service. I personally see that this is probably the direction that most regulators are going to go in, right? Or go towards, which is that here's vanilla flavor stuff. You just need this minimum commitments. And when I say minimum, it's not small, right? It might be a few $1 million to start. You want to introduce more stuff. You want to introduce lending. You want to introduce staking. You want to introduce this and that. You put more money on the table so that there's assurance for your users that if something goes wrong and you go bust, there's a minimum balance that you've maintained there that they can recover something. Because what is effectively missing from the crypto space today is something that was missing for a long time from the banking sector, which is basically insurance for your deposits. If you're a Malaysian if you're a Malaysian customer of a Malaysian bank, your deposits are insured up to a certain amount, right? Not everything, but up to a certain amount. This practice is common in many, many regulated markets, but it's not a practice that is that's well defined and adopted in crypto right now. So my hypothesis is that regulators will repeat behaviors that they know have worked in the previous or the incumbent traditional financial markets and impose that on crypto. And maybe that's good, maybe that's bad, we'll never know, but I'm fairly confident that that's the direction it's going to go into. You want to do more, you just got to put up more safety net and put up more money to show that you're serious about it.
Yeah, it's just like something like a collateral. The concept is like just in case that, like you mentioned just now, in case that this exchange or your service go bust and you have some liquidity to refund to your customers or whatnot. And given enough time, the regulations will definitely come in. And it's hard to say whether it's objectively good or bad, but it's just a change that at the end of the day, we all have to face. Yeah, it has been a good 1.5 hours, almost 1.5 hours already. We do have a few questions from the audience right now. I just want to quickly remind you guys, session is actually open. You guys can come up, just request to be a speaker if you guys want to talk to us. We won't bite, obviously. These guys here are pretty chill, as you heard from the session just now. The question that we have currently is from It's Marshall. Sorry to put you on the spot. I've posted your question here at the space already. Pardon my ignorance, pretty layman in this space. There's nothing layman about this. Okay? At the end of the day, our goal here is just to explain to people what we know and how do we actually prevent falling into this type of traps in the future. Anyway, here's my question to Faz. Why should we use a centralized exchange as compared to some decentralized exchanges? Oh, that's actually a good question. Do you want to retrace back a bit fast and talk a bit about the difference between a centralized exchange and a decentralized exchange, just so that people really understand what's going on?
Yeah, maybe I want to trace back even a bit further than that, right? To understand how a centralized or decentralized exchange works, you have to also understand how your money is represented or stored. And when I say money, I mean generally, right? Even your crypto. So we talk about the wallets first, right? There are different types of wallets, and essentially, you can have a Bitcoin wallet, an Ethereum wallet to store specific cryptos. Now, there are different types of these wallets. There's what's called a hard wallet or hardware wallet, right? It looks fairly similar to a USB stick. When you buy one of these, you set up a password, and they typically, most of the products in the market right now, they come with this 12-word seed phrase. This is like your recovery phase. It's the most important thing you must remember. You probably will not memorize, but you need to have it stored somewhere, because that's the only way to recover if there's no other party involved in the custody or securing your assets. So if you go down the path that you want to have your own wallet, whether it's a hardware wallet, or later I'm going to also share that there are some software-based wallets, the 12-word secret phrase is the most important thing you need to always have stored somewhere safe, reachable, and you know that belongs to that key. Because why? A lot of people I know, they buy more than one hardware wallet. It's going to be another nightmare for you when you have so many to manage, okay? So these wallets essentially is where you can store your balances. Now, there are software wallets, which are the equivalent of these USB keys, which are basically services which are available on the internet. Again, similar experience in the sense that you will get a 12-word secret phrase. And on top of that, you may, even with a hardware wallet, you may introduce your own password, like your login password. The 12-word secret phrase, and I cannot emphasize this enough, it's the only way to recover it, okay? Now, on exchanges, they use a combination of these wallets. That's why there's another, I guess, family of wallets that they refer to as what's a hot wallet and a cold wallet, right? So some of these wallets are connected directly to the exchange. These are called hard wallets. And that's the amount of Bitcoin or Ethereum available at any one time to transact with on the exchange. Most centralized exchanges use this model. But there is also, at the same time, a cold wallet for most centralized exchanges. I would even have to say all centralized exchanges have a cold wallet. So, when there's a total of 100 Bitcoins out of everyone's deposits or being traded on the exchange or could be traded on the exchange, a certain portion of it, a small portion, is left on the hot wallet, which is accessible for trade. The remainder, the centralized exchange actually stores it away from the network or away from the application, so that you increase the security measures so that those cannot be vulnerable at any time. All the hot wallet funds are vulnerable, right? Can be hacked. You hack an exchange, you probably get access to the hot wallets fairly, not to say fairly, but exponentially more difficult for you to then hack the cold wallet infrastructure. So you have this wallet infrastructure, okay? So in centralized exchanges, they have a hot wallet, they have the cold wallet. You as a user do not own the keys to either of these wallets. You have the rights over these wallets. You have to trust that your exchange is going to do the right thing and execute all of your instructions. And of course, there are limits to the instructions. You cannot do anything nefarious. But what I mean instructions, I mean like when you say, I have 1 Bitcoin, I want to sell 0.1 of it, the exchange will make sure that happens from the hot wallet. When you go into decentralized exchanges, that's the realm where the custody, there is no third party which is involved in securing your wallets. You are most likely going to use a software-based wallet, or you're going to transfer from your hard wallet into the cloud wallet, right? And then you are the only person in the world that can be responsible for this. It does not mean that you're the only one that can do stuff to it. You can still be hacked. Now, generally, and this is not financial advice, but general user experience advice, right? If you don't know what you're doing with regards to these wallets, you should not be using a decentralized exchange, because all of the responsibility is on you. You do one thing wrong, you send to the wrong address, the wrong, like how Ethereum addresses are like alphanumerics, fairly long. Nobody memorizes their own address, by the way. I can tell you that the most frequent mistake on MX Global is that when people want to send their Bitcoin out, they put their email address as their address. if you did that on a decentralized exchange and they had no other security measures, that Bitcoin is gone forever. No one in the world can help you recover it. So on centralized exchanges, you have this added layer of service by the exchange where to protect you against yourself. Okay, so generally, I would recommend that people use centralized exchanges if you're not a fairly sophisticated, not even fairly, like very sophisticated technical user. There are many things that can go wrong when you take on all the responsibility for yourself. Now, having said that, what would be the best practice in terms of securing yourself and your funds is that you should go to the exchange, whether centralized or decentralized exchange. You probably will use the wallet infrastructure that they afford you. You do your trade. And when you know that you don't want to do any more active trades, you should probably invest in yourself and learn how to take it off the exchange, whether centralized or decentralized. Take it off the exchange and store it in your hard wallet, because that's the highest level of security you can afford yourself. But again, I must advise everyone that you become entirely responsible for your own actions and essentially that USB key. If that thing goes missing, if you forget the password, if you lose the 12-word secret phrase, nobody in the world can help you, right? So I guess that's as exhaustive as I can give, but the long and short of it is really that centralized exchanges give you more service. And I'm not saying that because I run a centralized exchange, right? MX Global, we are a CEX, right? But essentially is that there are probably more things that you need to be able to do that the typical entry-level user will not be able to do and figure out on their own. And sometimes learning for yourself in crypto is a fairly painful and expensive exercise.
Yeah, actually, those thoughts that you shared is actually makes a lot of sense, right? I mean, in simple terms, one will use a centralized exchange if they cannot manage their own funds. They literally don't know where to store their seed phrases. They don't know how to manage their own wallets. Like if I were to recommend my dad to buy crypto right now, I wouldn't ask him to buy his own hardware wallet and get started and in such a complex manner. You definitely want to start with a centralized exchange, which is simple to use and etc. etc. Then for those who are more interested in self-custody, if you are good at managing your own funds, then definitely a cold wallet is a safer option for you. But then again, a cold wallet, a good point you pointed out right there is that if you lose your seed phrase, that means everything's gone. So at the end of the day, it boils down to everything also has a risk. Yeah, and it depends on how you manage the risk, whether you trust someone else to manage that risk or you're trusting yourself to manage your own funds. Now, we are not...
Actually, you know what?
Yeah.
A lot of people, when I tell them this,
Yeah.
I find that a lot of people are overconfident in their ability. So the simplest way I put it is, right, and especially people who are around my age, most people started off with a Hotmail address. I'm not sure if you guys did, right? But you just ask yourself, honestly, do you still remember your Hotmail password? Most people, unless they're still using Hotmail, don't remember the password to their first email address. So that in itself, I mean, you don't have to prove it to anybody else, but just to yourself, right? It is actually very, very likely in the long term that you probably will forget the password and you will probably misplace the 12-word seed phrase of that self-custody wallet.
Oh shit, man, you're making me a bit worried. I gotta go and check right now after this talk to make sure I go and store my seed phrases, whether it's where I previously put it or not. But apologies for the speakers who want to come up. We are no longer accepting speakers. We're just probably going to address one or two more questions because we want to end the session by latest 11:10 p.m. But Mr. Sani, do you have anything to add on regarding our topic over here before I move on to the next question?
Oh, no. Nothing much. But I guess...
Cold wallet.
Yeah.
Yeah.
You have to make sure that's waterproof since it's a bungee now.
Wow.
But I think what Faz said is very true. I think at the end of the day, if you want to be involved in crypto, and given the current situation where things are still in its infancy, the exchanges as we saw aren't very strong because there's no regulation and such. I think you have no choice. Meaning to say, unless you're telling me your $1,000 or $2,000, if you lose it on an exchange, you're okay, then fine. But if it hurts you, then basically you need to learn how to operate a hardware wallet, basically a cold wallet. And I think what Faz says is very true. Use the exchanges basically as the transaction vehicle. Whatever you don't want to use, then bring it off the exchange to the cold wallet, and then you need to understand how to store the seed phrase and such. As an old man like myself, I've my seed phrases are engraved on these kind of hard metal things, which are you take a sharp pen and you engrave it, and then I put it into a pouch which is fireproof and is in my safe. So and I have to learn how to do this because I think it's important. Because when you are dealing in this kind of situation where confidence is not very high, this is really your last resort. And even when we talk about traditional finance, Faz mentioned about banks having insurance deposits, insurance on deposits. I remember clearly during the financial crisis, we had clients who had, like, for example, $500,000, $1 million sitting in the bank, and they came to us and said, "Well, okay, is it safe in this bank?" I said, "We don't know, because it's a financial crisis, and if Citibank and Lehman Brothers can go down and stuff like that." I said, "We don't know." So I said, "What should I do?" I said, then we told them, "Well, you should actually go and open up accounts with every other single bank that you can do so. Transfer your money and make sure every bank account is 50,000. Why? Because the insurance deposit covers 50,000. So you got 10 banks, you cover $500,000 of you're guaranteed that you are able to claim $500,000 in a sense if everything goes bad lah." Of course, this is really a bit kiasu, a bit overboard, but that's the reality of it. So you have to go through some trouble if you really want to feel sleep well at night, so to say.
Yeah. Thanks, Mr. Sani, for sharing your thoughts over there. And the part where you mentioned about kiasu, right? I think that's the Singapore effect on you. It's probably time to come back to Malaysia to vote already. November 19, guys. November 19.
I received my postal vote, so
okay.
actually, tomorrow submitting it via someone who's going to bring it back up. Yeah.
Okay. Very nice. Okay. All right. We're down to our last question for the night already. And for those of you guys who missed the earlier part of the session, let's say you just joined like 5-10 minutes ago, do not worry. You see this space, the top left-hand corner of this space, there's this record button over here. Right after I end this space, you'll be able to listen to the recording of the session. I will just adjust the start times accordingly. So the last question for the night to wrap up our entire session is from Balls, and he asks, is it realistic for regulated exchange to disclose numbers on assets under management against user liabilities on a daily basis? This way, there's little room for exchanges to do hanky-panky stuff, at least not for an extended period of time. Faz, you want to take this question?
Simple answer to that is no. It is not realistic because the amount of work and processes that needs to be done probably takes more than a day, right? You probably do not want to accept a letter from me or my management that says, these are the amount of funds that we have and this is how much you have deposited, and it's true. You probably want a scenario where you engage a third party. Hopefully, as I kind of shared in the previous answer, like you want it to be like a notable auditor. And if any of you have worked in companies that have been involved with engaging auditors, you would know that, they are quite thorough. And assuming that volumes on the exchange also is not minuscule, right? Like not just like 2 or 3 transactions in the entire day, it then becomes fairly unrealistic to expect that all the balances and all that would be reconciled within a day, and then this to be repeated every day by engaging a third party. So the short answer to that is no, it's not realistic. But does that mean that we cannot come to a solution which serves that purpose? I do believe we're moving towards that. If it's any assurance to the Malaysian users the SC is not really a fly-by-night rubber stamp type regulator. They're actually quite strict, as frustrating as it is for myself and my management team to try to get things through the SC. The positive side of that is that they actually really do look out for your protection, right? You as the investor. So my personal thought is that long term, especially in regulated jurisdictions, it's going to be like traditional finance, which is that you rely on the credibility of the regulator to continue to police us and make sure that we don't do any hanky-panky with your funds. So such a direct and that's, in my view, very academic and oversimplified solutions such as just showing the balances tally every day, that can definitely be manipulated, that can definitely be abused. And the reality is most investors don't do all of their own research. So if it's just going to take down to somebody printing on or like publishing an A4 PDF and saying, yeah, balance are true, I can so see this going sideways and somebody abusing it, and later we're going to be in a similar space saying, hey, that was such a great idea, proof of reserves, it's just failed all of us. What do we do next? We can't keep going like this, right? I think this is the time when the industry has to start embracing the fact that regulators are there for a purpose. Yes, it is excruciatingly painful, especially when you have such strong FOMO and you see every other coin pumping and all that when the periods are like in a bull run. You think, oh, I don't have access to that through regulated means. But regulations are not there to try to make you rich overnight. Regulations are there so that the downside or these kind of events shouldn't really happen in the regulated jurisdictions. Now, having said that, my closing statement to this is that it does not mean that black swan events and negative events like this never happen in regulated jurisdictions. I think, as Sani pointed out before, you have so many other crises that have happened in other regulated jurisdictions in traditional finance itself. It just means that the likelihood of it happening is much lower. It doesn't bring it to zero, so you should still be careful. You shouldn't believe anyone. Not me, not Sani, not Futurizts, not CZ, nobody, right? Because you have to think through what are your rights. Legally, what are your rights if something goes wrong? In the Malaysian regulated jurisdiction, your rights are through the regulator. Your recourse is through the regulator. If you lost money on an unregulated exchange, the most you can do is complain to your regulator. But guess what? Your regulator can't do anything to that exchange. If MX Global abuses your funds, not only will I have 1,001 questions to answer to the regulator tomorrow, more than likely as a responsible person of the entity, I'm probably going to go to jail. So that in itself, at least to the retail investors, should provide you a much greater level of assurance than, a daily report that we put out that says your funds are safe.
Yeah, that's actually a good point right there. Right? I mean, the first bar, I would say the first check-in point to see if an exchange is legit or not is to just very simply do a quick Google search in Malaysia, go to the SC website and just take a look at whether the current exchange is recognized by the SC or not. And the SC also has a red list and also like, if I'm not mistaken, a list which it doesn't know. And obviously the red list includes Binance, Huobi, all those type of stuff. And like what you mentioned just now, in case that you lost any funds in these type of exchanges which aren't recognized or unregulated, then that's going to be extremely difficult for the SC to help you. Yeah, it's been a great 1.5 hours, guys. I hope you guys in the audience enjoyed this session. Allow me to just quickly recap what we've talked about for the entire session, and then I'll just pass it to the panels, to the speakers today, just to quickly have a quick last word. We talked about the FTX crisis. In essence, it was a fraud. It was like something like a Ponzi scheme. They created their own money printer. They used the user deposited funds to do their advertising, to expand their company. Then they just went full on bonkers. And after that, the public found out, or perhaps CZ found out, and he exposed the weakness, and FTX collapsed within 3 days. The lessons that we need to learn is proper risk management, like Mr. Sani covered earlier during this session. You do not want to put all your funds in a single bag or perhaps a single exchange thinking that, oh, it's entirely safe. I'm going to put all my funds in Binance right now because CZ has shown the proof of reserves already. Well, we don't even understand what that means. We don't even know actually what it represents. So it might be fraud at some at some extent also. So just make sure you do not put all of your eggs in one basket, and practice self-custody, right? That's the importance of cold wallet. If you want to make sure that your funds are safe, then make sure you manage your own funds. Make sure you learn how to get a bit tech savvy, get a Legend Nano S wallet. I think, if I'm not mistaken, it's only about 200-300 ringgit. And let me tell you this, it's extremely worth the investment. I think Mr. Sani will agree with me also. And all in all, when it boils down to the crisis itself, when we look at the FTX crisis, the two speakers here, including me as well, I don't think this crisis is over. And I think we still have quite a bit of downside to go, because we have to factor in how many victims are, or perhaps institutions are partners with FTX, and how many more will topple. So gradually in the upcoming months, you'll start to see all these over-leveraged exchanges having, very irresponsible actions, and we will gradually see them unveil. So yeah, Mr. Sani, some last words before I pass it over to Faz.
Well, if there's any last word, it's probably I mean, there are lessons to be learned from what we're undergoing. And like I say, I'm still very positive about the space. I hope people, sometimes when these things happen, it paralyzes you, and you kind of just throw in the towel, and you just walk away. I think for any investment, you should not just, I mean, let's put it this way, digitization, blockchain, cryptos, I think it's part of the future. You just have to come back again, do a lot more homework, hope the regulators come in, find a comfortable amount of risk to take, and I think you will enjoy the so-called overall rewards of investing in this space. Because I think prior to this, it was a little bit of a cowboy, very highly speculative. You don't lose money from price actions. You get rugged, which is a very bad taste in your mouth, leaves a very bad taste. But when that's settled, it is at the end of the day a very advanced technology. If you're looking at projects which have utility and so on, so don't give up. But come back with better equipped from this overall thing.
Yeah, words of the wise over there. Faz, on to you. Last words.
Yeah, it's going to get better, right? The silver lining in all these things is that with the Luna death spiral, with what's happening with FTX, weaker or abusive projects are going to be flushed out. No guarantee that all of them will be flushed out, but it's better than everyone hiding under the guise of operating fairly large, successful global businesses. So I'm confident that in the longer term, right, and I take a long-term view in most of the things that we do, and most of the things and decisions that we take at MX. The best projects and will survive this crypto winter, will survive this downturn in the market, will be able to course correct, because just as you put it just now, there are many projects that are intertwined or have some sort of relationship with FTX. Some of the best ones will be able to unwind from that, not wind up, but basically unwind from those relationships and come out of this stronger, right? So this is a thinning of the herd, which is going to be in the long term very good for the industry. I agree with Sani. One way or another, blockchain and cryptocurrency is here to stay. There's going to be some variant of this. And if you think that everything's already set in stone, it's probably not, because those of you who may have invested in crypto quite a few years ago will remember that some of these names that we talk about today, FTX, Binance, and all that, they didn't even exist. There was Mt. Gox, right, the biggest one in the world at that point. So it's not a given who's going to be the biggest in the world, whether 5 months, 5 years, or 50 years from now. But I am confident that cryptocurrency and blockchain will be in the economy in some way, shape, or form. And at MS Global, the truth is we make no money if you deposit your ringgit or Bitcoin or Ethereum with us. We make our money because you trade that. So my parting advice really is that come onto something like MS Global. Be safe and conscious of your own balances, your funds, because these are your assets, your property anyway. Use us for exactly what we are labeled as. we're an exchange. Come there, exchange it when you want to exchange it. Other than that, invest in yourself and learn how to secure your funds. And I hope that will be able to help you help yourself, and don't expect more from an exchange than that. We are just here to provide a platform for you to find that random stranger somewhere else in the world, or at least in Malaysia, and be able to sell or buy the crypto or digital assets that you want. Beyond that, a digital exchange, I don't believe is we're not banks. We're trading platforms. You're coming to us like how somebody would go to KL Stock Exchange, not to CIMB. So be your own bank and invest in yourself to be able to learn how to secure your funds.
Yeah, thank you so much, Faz, for speaking words of the wise over there. And I think ultimately, as an investor, everybody is an investor over here, I'm sure. Just realize that if you're affected by the FTX crisis, realize that your financial status can always be recovered, but you only have one life. So if anybody has any personal issues or whatnot, please go and seek professional help if need be. And just take care of yourself, guys. Just do us a quick favor. Make sure you follow these two extremely talented speakers over here. Faz, CEO of MX Global, Mr. Sani, economist and certified financial planner. And whatever we say tonight is not financial advice. All right, guys. Good night. Stay safe. And remember to vote on 19th of November. Bye. Bye, everyone.
Thanks. Bye-bye, everybody.